Lesson number 16, Journalizing. Hello guys, in this lesson, we are going to learn what is journalizing? What is a journal? What is a journal entry? What is debit and credit? What are the rules of debit and credit? What are the steps in journalizing transactions? After analyzing the transaction, we can now perform the next step, which is journalizing. What is journalizing? Journalizing is recording transactions in a journal. Yes, simple as that. This is where the recording part starts. However, we are not going to record the transaction like any other records. We are going to use a record book used in accounting. That book is called a journal. What is a journal? A journal is a record of financial transactions in order by date. The transactions will be recorded from the first day of the month until the last day of the same month. The transactions are recorded here in chronological order. This is how a journal looks like. Although there are other special types of journals, in this course, we are going to use only the general journal to record transactions. This journal has 5 columns. We have the date column, account title and description column, posting reference column, debit column, and the credit column. The date column is where, obviously, we write the date. The account title and description column is where we write the account name and a brief description of the transaction. The posting reference is where we write the account code or number of the account name written in the account title and description column. The debit column and the credit column is where we write the amount. Don't worry, I know you're asking, what is debit? What is credit? Let's proceed to the next slide. What is a journal entry? A journal entry is a record of a transaction in a journal. A transaction affects at least 2 accounts. A transaction can involve 2, 3, 4 or more accounts, but at the minimum, there should be 2 accounts. No transaction uses only 1 account. It should be 2 or more. This is what we call double entry bookkeeping. Remember lesson number 1? We mentioned double entry bookkeeping. It is a method in accounting that uses at least 2 accounts for every transaction. A journal entry, therefore, uses at least a debit and a credit. A journal entry has an account to be debited and an account to be credited. What is debit and credit? In our analysis, we use the words increase or decrease to show how the transaction affects the account. In this lesson, we are going to replace the words increase or decrease with debit and credit. Debit and credit are accounting terms. They are the terms that we will use to describe if an account is increase or decrease. Debit could mean increase or decrease depending on the account affected by the transaction. Credit could mean increase or decrease, again depending on the account affected by the transaction. In this lesson, we are going to simplify our discussion regarding these 2 terms. Yes, in some accounting books, debit is left and credit is right. We are going to define them straight away, as intended in most accounting books. No more T accounts or other concepts. We will define them in a way that will relate to what we had previously discussed in the exercises in analyzing transactions. Rules of debit and credit. Debit could mean increase or decrease depending on the account affected. Credit could mean increase or decrease, again, depending on the account affected. In order to fully understand this concept, we need to know the rules of debit and credit. This is the expanded form of the accounting equation. Assets equals liabilities plus owner's capital minus owner's withdrawal plus income minus expenses. If an asset is increased, we debit the asset. If an asset is decreased, we credit the asset. So instead of saying asset is increased, so we use debit in order to show that an asset is increased. Instead of saying asset is decreased, so we credit the asset. If a liability is increased, we credit the liability. If the liability is decreased, we debit the liability. So if you would notice, this is completely the opposite of how we treat assets as far as debit and credit is concerned. If owner's capital is increased, we credit owner's capital. If owner's capital is decreased, we debit owner's capital. If owner's withdrawal is increased, we debit owner's withdrawal. If owner's withdrawal is decreased, we credit owner's withdrawal. So it is similar to how we use debit and credit for assets. If income is increased, we credit income. If income is decreased, we debit income. If expense is increased, we debit expense. If expense is decreased, we credit expense. To help you remember the rules of debit and credit, assets, expenses, and owner's withdrawals are debited when increased and credited when decreased. Liabilities, income, and owner's capital are credited when increased and debited when decreased. So from now on, we're not going to use the words increase or decrease to describe how an account is affected by the transaction. Instead, we are going to use the terms debit and credit or debited and credited. Just a reminder, when we journalize transactions, we use the terms debit and credit to show whether an account is increased or decreased. What are the steps in journalizing transactions? First, we write the date. Second, we write the account or accounts to be debited. Third, we write the amount or amounts to be debited. Next, we write the account or accounts to be credited. Then, we write the amount or amounts to be credited. Next, we write a brief description about the transaction. These are the things to remember when journalizing transactions. Total debit or debits should be equal to total credit or credits. indent the credit or credits and description to distinguish them from debit or debits. The data in the posting reference column will be written after posting, which is the next step after journalizing. So don't worry. The best way to learn is by doing it. In our next lesson, we are going to perform some exercises in journalizing.